I didn't even know this word existed till he told me one day back in 2015 that, we've now got within retail, you'll probably see the D2C industry merging. So I had to stop him and ask him that just tell me a little more so that I understand which industry is this. And today we are virtually sitting on a great big industry which has now set such new benchmarks. And thank you, sir, for actually giving this to India and Bharat. So, I know at Fireside, we've been speaking to each other. You've been speaking at our events. We've met you so many times. And I always realized that your approach was that if how to solve a problem within the FMCG industry. I remember at that time meeting Vinita, and she told me that, we want to give cosmetic to every woman in this country so that she can afford a cosmetic there. So today, now when we have seen the D2C industry growing to this extent, we have so many products. Now within that, what more problems need to be solved? And therefore, what D2C brands do you see coming up in times to come?
Great. It'll be a slightly longish answer. If
Sure,
that's okay.
sure.
So I think the premise on which we are building our entire thesis, and some of you are investors and a lot of you are entrepreneurs. I'm sure some of you will resonate with that. See, fundamentally, we believe that there is a very strong emerging consumer who's demanding choice. So to us, the first starting point is what is that consumer inside? What is that white space,
Right.
which is not getting met with the existing offerings? So the word D2C to me is actually not about D2C. D2C is almost stereotyped into your own website and trying to sell through that channel. We think it's a channel.
Right.
Now, what started out was really trying to figure out options which digital will enable through access, through conversations, through digital media. And obviously, the best example of that was Mamaearth.
Right.
They launched with a very simple problem statement where they said that young parents are looking for safe, natural products for the kids.
Right.
And their own story has been well, kind of understood and talked about. And then they realized that several myths kept getting broken. And as a levers guy, sometimes I was horrified with some of the assumptions that they were making. For example, how do you launch a mosquito repellent product as a roll-on, along with a tummy rub for colic, along with a shampoo and a diaper rash cream, all under one brand? So as purist, people who came from the levers kind of background, we said, listen, this is blasphemy, right? How can you have a mosquito repellent and a diaper rash cream under one brand? But that was the new age of thinking, new way of thinking, which disrupted. So that was to me the first learning curve, 1.0
Right.
of these digital brands,
Correct.
where you said, find a good insight, understand what the problem is, and how do you solve for that. And digital became a great way to get proof of concept, product market fit, understanding of consumer preferences, rating, reviews, everything which you couldn't do what we used to do with market research, Nielsen, take us 2 years to figure out, was happening literally on an everyday basis. Now COVID happened and accelerated the adoption of digital far significantly. Now what we are finding is the biggest driver of this whole opportunity is this concept of omni-channel. It is not about D2C, it is not about e-commerce, it is not about quick commerce, it is about how do you integrate everything into one common paradigm. So maybe take an example. We have a company called the Sleep Company.
Right.
Sleep Company is a mattress company which is getting into comfort tech. So they have a patented technology which allows you to get some kind of a layer on top of your mattress which gives you better sleep. And it works, and all of us are consumers, so I can vouch for that. But they realize very soon that it's an expensive product and people want touch and feel. So they have to start opening up stores. But the store business is so beautifully integrated with the online.
Right.
I can tell you the experience of walking into a Sleep Company store and walking into a store of any other mattress brand is completely different. There is no shelves of products, there is no stacked up products which these guys are throwing up and down.
Right.
There are 3 beds, you can lie down, you can experience it. You want to order, they'll open up an iPad. The same Shopify system which powers their online is powering this, the same logistic, the same warehouse. Now that is the innovation. That is the omni-channel play.
Correct.
So if you start now visualizing, saying, how do I make a brand, relevant to consumers? All the brand marketing is happening digitally. All the conversations with consumers are happening digitally, but the touch points are happening all over the different channel choices. So that is one paradigm which I feel, as both marketeers and investors, we need to understand that there is something happening out there which is very dynamic, and for us to stay on top of that is really critical.
Yeah.
Second question was, where are the trends?
Right.
Let me give you some interesting example. Mama Earth happened, all of us were excited. Now they are into skincare, they are into Dermaco, they are into Aqualogica. So we said, what else? I mean, is there anything else left to do in PPC? Then came along Nat Habit. And Nat Habit said, I will give you kitchen-made products which are what your grandmother or your grandparents or your mother used to make. And they will have real ingredients, they will have things like rose petals, they will have all those products. And that became an interesting success. They're doing really well today. And they are completely different than, say, what a Mama Earth is doing. So I think the moot point is brands are not governed by product, but governed by how you are selling it as an overall proposition. Then we have Pilgrim. And Pilgrim came and said, I will bring international beauty to India. But international beauty to India, if you just bring the entire brand from, say, Korea or wherever, France or Spain or other places, is not going to be affordable for the masses. So they said, let's bring the ingredients, we'll formulate, we'll produce, we'll manufacture in India, right. And therefore we'll get the price point, right? Another great example. So that is another interesting, I would say, paradigm, that there is so much of white space in the market. Correct. I feel we are just at the start of the cusp. And I can talk about, the India 2, the India 3, the Bharat, the Middle India. I can talk about wellness. I can talk about healthcare. So, we are truly excited. I think we are blessed to be in a situation in a country like India where there is a demanding young consumer and so much of headroom for growing interesting brands.
Absolutely. And I totally agree with you that, the opportunity perhaps in one way has just started. But sir, at the same time, we're also seeing that there is a lot of Me Too now happening in the market. For Ayurveda, you can see multiple products almost similar to each other. Now, how do we avoid this situation? Because we know ultimately in an industry, this will only lead to sort of the industry not pushing itself up, but going down with, too much competition. So, as in somebody who's building this industry brick by brick, how do you sort of say that, how would a sleep company be differentiated from a Wakefit or let's say some other mattress brands? So similarly, if somebody is in the beauty industry, how do they differentiate themselves? Because, you don't want a full shelf and nobody buying.
So I think, first of all, Me Too doesn't work. So let's be honest, if you feel that, I can do another onion oil based whatever, serum or shampoo or something, then I'm saying it's a fool's paradise. And let's be honest about it. There is no mincing words about it. So therefore, how do we bring the disruption? I think what India has not seen enough of, and I believe there is huge opportunity, is true R&D based innovation. I think we are still dealing in recipes. If you look at food, if you look at beverages, if you look at personal care, beauty, these are still ingredient stories, these are still recipes.
Right.
So is there an opportunity to actually create innovative products which are truly based on, like for example, we were talking to some experts internationally, and this whole concept of functional foods is started coming in. How do you create ingredients which can truly deliver some results? I met a young, 2 students from college just now who are, creating these chocolates which have melatonin in it. And they're talking about saying, there is some craving for chocolate, but it also helps you sleep better, and some, period pains for women and all that stuff. Now, I'm saying that is to be innovation. Now, then the question is execution. So I'm not getting into success or failure. I'm just saying that the first fundamental thing is that there is an opportunity to innovate on product. Right. I think the second fundamental thing is there is an opportunity to innovate on the business models. And there are two ways to do that. One is on the supply chain. Now we are finding that there is a huge aspirational demand coming up in the smaller towns in middle India and smaller India. But you cannot take a Mama Earth and just plant it there. It will not work. You have to almost start from a zero base of saying, who's this consumer? What are they looking for? What is the pack size? I'll give you an example of 30 years ago when I started my management training days in Hindustan Lever. Right. And this was the first time that anybody in the country had launched a sachet, a shampoo sachet. This was in 1987. Sorry, I'm disclosing my age, unfortunately. We were selling sachets in the market with the premise that this is not going to replace my shampoo bottle. We said there is this girl in the small towns of Barabanki and the small towns of UP where I was training, who is going to use Lifebuoy to wash her hair every day. But on a Sunday, she wants to use a sachet. Now, that is an insight. Right. Therefore, the price, the SKU, the unit size, all of that was designed for that. I'm saying if you can think through that model, that is the second, I would say, opportunity. The third one is the business model of how you engage consumers. Again, one interesting example, we have a company called Traya. Traya is a hair loss solutions company. It's a problem. They started with men. Every man beyond a certain age, and we used to say 30 plus, I think is becoming even younger than that, is conscious about the fact that they are either losing hair or they're going to lose hair. And therefore, the desire to manage that or have an answer to that is very high. So there's a huge market. That's never a question. Now, what the company decided is that this is not something which can be just solved through topical application. Because topical application you apply and then you stop applying, it kind of goes back to the reversal. So they figured out through some R&D, through some discovery and through some development that there are three elements which need to be sorted for. The first element is your gut. The cause of hair loss starts with the gut. Then the element is your diet and what you're eating, not just for the gut, but also some things that you eat can also increase the incidence of hair loss. And then of course the topical part of it. So they created a program, and they said that we are going to offer this as a regime. So now their business model is not selling products or not selling creams. Their business model is selling a regime. And they have now proven through consumer tests that if you are compliant for 5 months on this program, 93% people are seeing positive results. Yeah. So then the business is now, how do I make you compliant? So there is engagement, there is nudges, there are coaches, so the whole business model has got transformed from not selling product, but some kind of a solution which you have to do. Now what happens automatically is that your average LTV goes up to 10,000 rupees because you are selling me a 5-month package. But in the end, if I see the result, I am happy. I am a reference for you because I'll tell 5 other people. Right. So I think the beauty is that the opportunity is not linear. So my submission to the group here and a much larger audience is think innovation. Think what is that insight which will change the way you are communicating with the consumer, because the brand will eventually have to resonate with the consumer. But underlying the brand is also what the proposition is. Right. And that I think is sometimes missed by some of the new age entrepreneurs, because they are thinking, because Mama Earth could be successful with onion oil and sunscreen and all, I can also do the same and I will be the second best. There is no second best. Unfortunately, the chasm between the first and second is so high that it doesn't even work.
Right. And sir, also, because initially the industry was small, so still it was possible to get some funding or at least a small check. Today, we see that it is increasingly difficult even to find a small check for your D2C brand, a new brand particularly. So, bootstrapping has always been a great way to do business in our country. So, what is your advice to young brands who are actually looking to build a business but can't find funding and sometimes therefore don't want to carry on with the business? But, in our generation, there was no funding. So we built businesses hands-on. What would you?
So I think, first of all, I would not 100% agree with the fact that there is less funding. I think there is more funding. Today, the funnel at the top of the startup ecosystem is so robust with angels, family offices, right, angel networks. If you don't have something that convinces me that it is exciting, why would I invest? So I would throw the question back on the entrepreneurs, saying, if you come to me with an idea, I mean, we have met companies which are literally getting started, but such a strong concept of what they are trying to do. I just met, I had a huge, debate with my partners. I won't say fight with my partners. Where, I met this young girl, 10 years in Unilever, and she is starting something, not even in the market. And I said, listen, let's write a check. And they said, we don't do stuff like this. We have to see proof of concept, we have to see product and all. I said, listen, this is going to work. Trust me. And, I did it with Mama Earth, I did it with Licious, I did it with Paperboard. But the bottom line is that funding is not the issue.
Right.
I think it is getting the investor to understand why I will be successful. And second is that funding is also a double-edged sword. You raise as much money as you need to get to that proof point. I don't know if any of you know this, but in 2016, the total money that Varun raised for Mama Earth was 70 lakhs. And this is not like 25 years ago. This is 6-7 years ago.
Yeah, right.
With 70 lakh rupees, he was able to take a business to a revenue run rate of about 30 lakhs a month. And that is when we put the money from Fireside. So it is not about saying, unless I raise, the biggest problem for us is you meet, and pardon me for saying this, we meet very senior executives from industry who are saying, listen, I am going to leave my job only after you write a check of $5 million.
Yeah. Which is probably a wrong approach completely.
Yeah, that to me is a non-starter. I mean, then you're not an entrepreneur. You're a manager trying to pretend to be an entrepreneur. But if you say that I am going to start something and I have this great idea and I'm going to work on it diligently and I'm going to create a product, there is funding out there. Now, not every funding is a VC funding. And I think that's the other myth. Why should I just met a young girl outside who's building what she calls sugar high business in Ranchi. Now, this is an indulgence business with cookies and lovely, delicious products. Now, I'm not sure that this will be a business which will eventually get a VC type of a thing. I'm sorry if she's in the audience. But why do you need VC? You can build a very nice, almost like a personalized business and build it slowly over time with a certain limited amount of funding. And I think that is, to me, the biggest,
success
mind change which needs to happen.
Yeah.
So funding is there. Funding is there. I think the kind of investors, the kind of growing type of investors, there is almost like FOMO happening today of people wanting to write checks. But the fundamentals have to be there. I mean, people, even if you're an investor who has no understanding of consumer, you still want to look at the entrepreneur in the eye and say, listen, why should I believe what you're telling me makes sense or doesn't make sense?
Right. And sir, do you feel that there are opportunities for merger and acquisitions? For example, if somebody is, doing a product, it could be bought by, let's say, a larger beauty company.
It's growing like a weed. I mean, I don't know if I should be saying this. Okay, I will not say the name. Yesterday, we were invited by one of the top 5 consumer companies in India. Their entire executive committee was meeting in Bangalore, 25 people, and they invited me and my partner to come and talk to them about trends, about what's happening in the market, and how every large consumer company is looking for acquisitions.
Right.
I can tell you that categorically because we talk to them. Because there is a fundamental issue for large corporates to
innovate
do this kind of innovation.
Correct. Yeah.
They are not the 0 to 1 or even the 1 to 10 guys. But at 100 crores, 150 crores, they are extremely acquisitive because they know that now the muscle that they have, distribution, quality, supply chain, manufacturing, they can accelerate that business from 100 to 500 to 1,000 much better than sometimes even the entrepreneurs.
Correct.
So the call for us as investors is, should we go that route or should we go all in and do an IPO kind of a route? So the good part is there are choices.
Right.
But I can promise you that the kind of interest in acquisition in India is phenomenally high, and not necessarily 100 crores. At a 50 crore brand,
Correct.
Today you will have buyers.
And even sir, at regional level, there are companies, who would want to work with startups, have their products on board I mean, if you go to a city like a Surat or an Ahmedabad, there are 100, 200 crore companies who might want to look for an acquisition at some point.
So I think the desire to acquire is very high.
Yeah.
I think how you integrate, how you then work with the company. I mean, those are still challenges which are not easy to solve for. So I wouldn't say it's a
Right.
whatever bed of roses that it's happening.
No, always difficult, but achievable.
The opportunity is there. So what is exciting, Ritu, for us is that we are seeing exciting new ideas. We are seeing very high quality entrepreneurs. And we are seeing the ecosystem mature, whether it's infrastructure, whether it is, even things like quick commerce, ONDC, they're all contributing to what is possible and where it is going. So I am absolutely heart on my sleeves, big believer that every one of you in this room who has come here all the way, I'm assuming you have some interest in digital brands or even brands, you're in a good space.
So, sir, before I open the floor for discussion, the IPO and the exit at the IPO level. Now, we've seen Mama do it, and they've set up precedents of sorts for a lot of other companies to think about it. So, at what point do you think a company should really think an IPO?
So I think we are also learning, to be honest. Maybe Herman has probably more experience about IPO than I have. I think what we are finding is that if you have a fundamentally strong business model, which is profitable, which is high growth, which is enough of a niche that you can continue to grow without, getting swatted aside by the big boys. I would say at a thumb rule, $100 million brand and a double-digit EBITDA would be a good candidate for IPO. I think the learning for us has also been that IPO alone is not the end game, it's the start. Because very often what happens is that as an investor, if I own 20% in a company and the company was IPO and it's 10,000 crores, it's not that I can sell 2,000 crores worth of stock in the market. So it's a journey both for the company and for the investors. But today we too believe that $100 million kind of a revenue with at least a double-digit kind of an EBITDA. So let's say about 70, 80 crore, 100 crore type of bottom line EBITDA could be a very good IPO candidate.
And sir, would you also suggest for them to go the SME IPO route? Is that a good idea for a D2C brand?
So I don't know enough. I'll be honest. I think the way I have understood the SME IPO is that it is more of fundraising alternate to build your business. It is not a liquidity opportunity where as investors you can exit because the sizes are small and the floats are very low. But if you are looking at willing to manage a listed company in some form or fashion, and that's a good source of funding. See, the good part is that today's entrepreneurs across the board, they come with a very clean mindset of wanting to build the business the right way. They have a strong purpose of what they are doing. So even the stock markets like that kind of a narrative. Because it's been a murky situation, right? I mean, not every company is run with the right level of governance and all that. So we have been told continuously by the experts, by the people who understand the stock markets that these brands do have potential to list on some of these exchanges. The challenge is that if you are able to raise private money and if you are able to take it to the level where they can list on the the main bourses, that is always better because then it's just that the fundamentals match both in terms of liquidity, in terms of coverage, lots of those things start becoming.
Sure. No, I guess for some companies it might work, but not for all perhaps. Yeah. Okay, happy to take a few questions from the audience. We'll take about 4 to 5 questions depending upon how the time works out. Yes, please. Can we pass on the mic here if it's possible? Yahan mic bheje. Okay, you take my.
Good afternoon. My name is Chandan. I'm from Ahmedabad. So my question is that you mentioned Mamaearth many times in your conversation because it is a successful startup right now. When you said that 30 lakhs was their ARR kind of thing and that is the time when you invested, what was the key factor which you saw there? Was the problem statement of the company? Was it the founders? Was it the white space which was available or anything else? What was that factor which took you to Mamaearth at that early stage? That is my question.
See, so I'll answer it in two ways. I think it's always founders first. There is no, at our stage of investing, there is no other option. I mean, if you find good founders and in a market which you believe has that white space and the potential to build a reasonable sized business, that's the only two benchmarks that matter. Because how you navigate it, how you will execute, how you will build, how you will pivot, all of that will change. Now, who knew Mamaearth will have 7 brands? Who knew they will not be a baby care brand, but also adult? Baby care contribution now is so small. So that is the, I would say, the gospel truth is we have to believe in the founders and their ability to build it. The slightly lighter vein is that I wrote a personal check in Mamaearth when they had nothing. I just met the husband and wife and I loved them and I said, I'm going to invest in your company. So that is intuition. It was my money, not my investors' money. But certainly, at the stage that Fireside came in, we did have a high conviction that they were executing well. I think 30 lakhs was a good benchmark because we could see how they had built it, how they were frugal in how they were managing it, how they were working with some of the e-commerce players. So eventually it is always going to be, to me, there is no other substitute for good founders.
Yeah, hello, sir. So this is Rohit from Baroda. I just wanted to ask a very simple question. A lot of competition has came up in this beauty and personal care segment. So what do you think now? Is there still space? Should the budding entrepreneurs enter this space still? Or do you think the glass has already overflown and then we should allow some time to cool things down and then enter after some years, maybe?
I think I did address that a little bit earlier. So I think if you have something which is disruptive, it could be technology of how you deliver beauty in personal. See, this whole concept of beauty from within is coming up. The whole concept of enzyme-based, how do you treat? Again, a personal example, my wife just visited Korea. I mean, we are not even scratching the surface. The kind of technology, the kind of treatments, the kind of regimes they have. I was almost fell out of my chair when I heard there's a 15-step hair regime that you can do to clean your scalp. So believe me, it's not done. That is one end, which is the premiumization end, which is the urban phenomena. I don't think anybody is really addressing the needs of the middle India or the rural India. And that is today being addressed by very middle of the road, existing legacy players. If somebody can come in and disrupt that, it's a huge market waiting to happen. I mean, we have invested in a company called Rosanna. Yeah. This is a assisted commerce, rural, Flipkart 2.0. So they appoint women in villages, actual villages. I visited the villages. Believe me, unless any of you comes from a village, I think I certainly don't come from a village, you will not even believe how different that business is or that market is. Now there they are saying, हमको बिंदी चाहिए, हमको चूड़ी चाहिए, हमको साड़ी चाहिए, हमको lipstick चाहिए. But the lipstick has to be 99 rupees. So can you give me a lipstick which is not such a bad product that it spoils my lips for 99 rupees? I can tell you there's 1,000 crore business sitting there. So it is really about figuring out who's your customer, what is the need gap, how do you then execute, how do you distribute, and create products for that. So, not done.
Thank you.
We have more questions. Yeah, if we can please just pass on the mic behind them.
Yeah, hi. Myself, Giridhar. I just built a brand from past 2 years thinking that I should not raise external money so that I understand the nuances of the business. And right now it has touched 10 lakhs per month. Now, as I spoke to many VCs in the morning session, the minimum monthly run rate to get access to VC is 50 lakhs. That's what I heard from them. And now I am at a stage where I have touched 10 lakhs per month organically. I'm not running any ads. So I understood the customer and the brand is built. I somehow seeing the product market fit. So how do I take my brand from 10 lakhs per month to 50 lakhs per month? Because I'm completely bootstrapped and profitable and also a little bit profitable, not that much profitable to scale to that level. So how can I go with this situation?
I think you're talking to the wrong VC. So maybe yeah. So there are VCs, and there are now a lot of, I would say, almost professional institutional investor firms, and I can tell you names like Sauce, Whiteboard, so many of the Multiply. All of these people, they invest at this stage. So you have to first identify. I think the effort you have to make is saying, how confident am I that I have the product market fit and I can convince somebody to put money behind me as a founder and my business, which has some proof point. And second is, who is the right person to talk to? So talking to us will not solve the problem. You will have to talk to the right investors who are willing to come in at that stage. There are angel networks, there are individual investors. Actually, that funnel is huge. It's a little unorganized.
Yeah.
So maybe it's an idea for Ritu to take back and say, listen, how do we create an ecosystem of getting people together and saying we can, because the kind of money you should be raising should also not be phenomenally large. I mean, I would say at this stage of your business, maybe 1 or 2 crores should be the round size that you should be looking at. And again, that's not something which is optimal for a fund of our size. Yeah. So
I think Shanti was here earlier, so maybe you should be speaking to Shanti.
Thank you.
Okay.
Hi.
Yes.
Hi, sir. Firstly, great what you've done in the ecosystem in India. Thank you very much for that. It's always great hearing you speak and reading all the great stuff that you've been doing. I have a quick question on gross margins, primarily from the FMCG space. What do you feel would be a healthy gross margin for a FMCG brand skewed more towards D2C heavy versus omni-channel offline heavy?
I mean, that is such a generic question. I don't even know how to answer that. I mean, what space, what sector, what kind of business? How can I?
Too broad.
Okay. See, D2C mostly for brands which are targeting more premium customers. In the food space, we look at somewhere in the 50% margin. In BPC, it is more in the 65, 70, even higher. But that's a generalization. If you're looking at more mainstream, small pack size, retail distribution, then typically food brands come down to about 40. I mean, that's a big thumb rule.
No, thank you very much for that. Thank you.
We'll take one last question, please.
There's one here. There's one at the back.
Okay, but there's a lady who wanted to ask for quite some time, so probably we'll give it to her.
Nobody's asked me this, but I want to say this because I'm very proud of the fact that 45% of my entrepreneurs in my portfolio are women.
Yeah.
So if
waiting for our list to be in your portfolio. Hi sir, I'm Riddhi Sharma from Ahmedabad. I'm building Baby Org, that is health and wellness Ayurvedic sector for babies and kids specifically. My question is somewhat different. It is more like when you started taking the investment journey. People says that investment is like getting married. जैसा भी partner मिला है, you have to go along with that. फिर आप कुछ नहीं कर सकते. So getting the right partner at the right time is very much important, similar to the marriage and similar to the investment thing. So we have heard it many times that what VCs invest in. VCs always invest in the founders. They don't invest in the business. ये तो सबने बता दिया. I wanted to know what founders should look into the VCs then when they are approaching to the VCs.
So it's a 7-year marriage. It's not a lifelong marriage. You have to keep that framework in mind. See, it's actually a very good question. And one of the things that we encourage a lot of the entrepreneurs we talk to is to actually do diligence on us as much as we can do diligence on them. What you should look for in a partner is authenticity and genuine desire to see you succeed. And I'm not saying it as a marketing spiel. If I believe that my success will come from your success, then you have found a good partner. I mean, I have said this in many forums, including many of Ritu's forums, saying we are kingmakers and not kings. We have to recognize our role. I started saying now we are queen makers and not queens. But you have to be very, very clear. All your conversations you should reference. We just invested in a company which is doing 20-30 lakhs of revenue. So it's a young company, they're obviously excited to work with us, all of those positive things. They spoke to 4 of our founders before they even signed the term sheet because they wanted to know how we work with them. They wanted to know, what to watch out for. So it is as much, that आपने जो शादी का reference दिया, it is the same thing. I mean, both sides, families do the diligence, and that's what you should be doing.
So, like, according to you, it is absolutely okay to ask questions to the VCs. They don't feel
100%.
offended.
I mean, if they feel offended, you please run. Because that is a red flag, right?
Thank you so much.
But ये भी बात पक्की है कि यशराज फिल्म से कोई एक्ट्रेस पूछती नहीं है कि उनके बारे में पता कर लेती है. So you don't go and ask about it.
No, see, a smart founder will do the diligence already in advance. And आपको VC से नहीं पूछना है, आपको उनके आसपास के ecosystem से पूछना है. Because when I ask you, how good you are, what do I expect from you? I mean, I have to form my judgment based on a 360 diligence. वही आपको भी करना है.
True. Thank you so much.
So, sir, we'll come to the final over here. I'm sure there will be some personal questions for you, which I'll leave off the dais. But any sort of final, words that you want to give to the D2C industry, particularly about, putting the focus on the product and not so much on raising capital.
I mean, I would say, lage raho munna bhai. This is the time to build brands in India. I mean, I can't emphasize that more. Don't wait for VCs to sign up. I'm saying, to me, the biggest angst is that why aren't there 1,000 new brands? And VCs will not be the answer to all 1,000, but they can be some really exciting young brand which can be built at a city level, at a regional level. It's just that, the myth of saying कि मेरे को unicorn बनाना है. I mean, we don't want unicorns. We want good, solid, long-term sustainable brands. And the last point I would make, which is my personal agenda for the next 10 years for myself, is please be very conscious about sustainability, about planet first, and whatever you're doing in your brands, keep that in mind. It's a business imperative. It helps you in your business because investors look at it in a positive view. You are contributing back to the, to the environment. But even otherwise, I'm saying this is, this generation has to solve for this. And I truly believe that if we are not conscious, then everything else doesn't matter, right? I mean, if we are going to, Bangalore heat has been the worst ever in the last 55 years, and it's going to get worse.
Absolutely. But sir, sustainability, according to you, has to be into the business model itself. Because I also see a lot of sustainability which is very social, but which sometimes does not sort of transgress into a very good business model.
No, so see, again, I think it's an ecosystem play. All of us are trying to do work to make it happen. So I'll give you an example. There is plastic use, which is the biggest menace in our industry, right? I mean, all of us know that the consumer brand industry contributes the maximum amount of waste on the plastic side. Right. Now, plastic you can either reduce on your primary packaging. Now that has its own implications of cost, alternates, barrier properties, in the food business and all of that stuff. But there are answers. Are you looking for the answers? And I can tell you several of our companies have taken the initiatives. But beyond that, there is secondary packaging. There is tertiary packaging. Then there is a whole concept of reuse. There's a whole concept of recycle. It's just the consciousness. Right. We have been working with our companies and continuously pushing them, saying, like for example, Sleep Company, they wrap their mattress in a large plastic sheet. Now we are saying, reduce the grammage of the plastic. That itself is a sustainability measure. We are saying change the plastic from virgin plastic to, now you may say where aesthetic kharab ho raha hai, but for a consumer also they are getting much more conscious, saying that what are you doing for the environment? So I think it has to be built into the business model. Right. And it can be done. I think that's our belief, and a lot of examples are starting to emerge.
Yes. So we're already seeing, fashion, luxury, rental businesses. So they're sustainability by their sort of business model itself.
I think there is no substitute. I mean, it has to be done. And today the market, whether it is stock market, whether it is investors, we have to undertake all kinds of commitments to our investors, especially global investors, around how we are dealing with ESG with our companies. Right. So absolutely. There is no escape.
Yeah. Thank you so much, sir. This has really been a wonderful conversation. So please, a huge round of applause to